Hello everyone, I'm back once again with the next video, and today we will learn how to structure our CTC. How do we make the CTC? This is the topic of today. We will be learning what is CTC, what is net in hand, and what is gross. Excited to learn? Let's go and let's start learning. Hello everyone, now let's start learning about how to build our CTC. In India, we have three types of structure. One is a fixed structure, one is a flexi structure, and third one is a consolidated pay. Fixed structure means when the company is deciding what are the different allowances or perks company wants to give. And flexi when the employer has a say to decide the different allowance and perk sides of the package. Consolidated, which we give to the lower salary slab people, where we need not to do the bifurcation in the salary. That's called as consolidated salary package. Whether you are following the fixed structure or a flexi structure, you divide the salary into the different heads like basic, HRA, LTA. Why do we divide it? Because after the basic, we add the allowances to save the employee tax. Under section 10 subsection 13 and section 14 of income tax, there are different allowances being given. If you will add those allowances in the package, then obviously the tax of the employee will be less. That's the reason we add the allowances. Allowances means the money which you're giving to the employee so that employee can do her personal expenses. Versus the perquisites. The perquisites is the facility which you are giving to the employee. Like you have given insurance, you are giving some coupons, you are giving some club facilities, you are giving a house to stay. These all are the different perquisites that comes with a different tax liability. The sum of basic allowances, perquisites, and the compliances. In payroll, we use certain compliances like PF, ESIC, LWF, PT, statutory bonus, and sometimes gratuity. The sum of this all is called as CTC. CTC means cost to company. Whatever the amount the company is spending on the employee is called as CTC. Whether it's a basic, allowances, perquisites, compliances being provided to the government, the sum of that all is called as cost to company. And the money which you are giving as a cash, not with a facility, that's called as gross. So what you are giving as a cash? Basic and allowances. So sum of basic and allowances, that means the cash given before any deduction, is called as gross. Now what's net in hand? Net in hand is the amount which you are giving to the employee after all the deductions. So from the gross, we minus certain compliances, income tax, the deduction, the money which the employee gets after the deduction is called as net in hand. So we have understood the concept of gross, CTC, net in hand. CTC is the total amount what a company is offering. Gross is the total cash before any deduction. Net in hand is the cash after the deduction. Now, how do we frame the CTC? That we are going to learn in today's video. So I'm taking an example of, let's say I have to frame a CTC of 8 lakh. Let me increase the size a bit so that you can see properly in the video. All right. The first component is basic. Basic means the lump sum amount what we pay to the employee. When the CTC is low, let's say the CTC is around below 4 lakh rupees, then you should refer once the Minimum Wages Act if your company is coming under section 2G. For that, I request you to please watch my minimum wages video where these things have been explained correctly, that how the minimum wages is derived, to what companies it's applicable, and how basic is being derived from the minimum wages. But when the package is big, let's say it's 6 lakh, 7 lakh, 8 lakh, 9 lakh, 10 lakh, so above 4 lakh, let's take an example. When the package is big, then at that time we keep the basic between 33% to 50% of the CTC. Even can more. There is no law that we have to only keep 50, 40. No. Minimum wage is only applicable to only section 2G companies, not to everybody. That's the biggest misconception. We don't keep much basic for the bigger packages. We keep, according to the industry standard, we keep bare minimum 33%, because the more basic you will keep, the more tax to the employee. That you have to keep in mind, because basic is fully taxable. When the package is high, try to keep the bare minimum basic. Bare minimum will start with 33%, max up to 50% until or unless you are over the minimum wages. You can even go 60, 70, 80, 90%. There's nothing wrong or right in the CTC structure. It's all about the tax implications. The more money you will keep putting in basic, the more taxes to the employee. So that's the reason I will take it here, the bare minimum, that's 33%. With the new labor code, the structuring will be different. At that time, it will be 50% of the gross. That's again a logic behind it that we will be talking in the next video. What will happen, how the wage will be different in the when the new labor code will come. But for now, till the time the new labor code is not there, we have to keep the basic 33% to 50% of the CTC. The next component is our allowances. So allowances could be my HRA, LTA, children education, hostel expenditure. These all things are my allowances. Allowance, as I said, it's the money being given to the employee so that employee can do her expenses. HRA is the money we are giving so that the employee can pay the rent. Again, I can put any amount what I feel, but the standard we put 40% in the case of all the cities, but in Mumbai, Calcutta, Delhi, Madras, we put 50% of the basic just for the tax calculation. So in the taxes, the tax exemption is rent paid minus 10% of basic or 40-50% condition. That's the reason we put, in the case of Mumbai, Calcutta, Delhi, Madras, 50% of basic. In other cities, we put 40% of the basic. Then you can add any other allowance what you want to give. LTA, again, it's given for the condition when the employee wants to travel with the family. It's only for the domestic travel, given only in the block of 4 years. Right now the block is going 2019 to 2022. In this block period, only 2 times the LTA can be claimed. That means money you can add every year, but tax exemption can be only twice. Any amount again you can put, but I'm keeping it here 8.33%. Then I'm adding any adjustment factor. You can put any amount in the other allowance and later we will adjust it. So this is called as my gross. So gross is the sum of everything, all the cash component given. So we are not going to learn about the perquisite in the next this video. Probably in the next few videos I'll make you learn. I'll come straight forward to compliances. So I'm giving here PF. Use video to understand how PF calculation happen. This person will not be under ESIC, not under the statutory bonus, right? But if I'm talking about Karnataka LWF, it will be 40 yearly. Now let's talk about the deductions. So deductions from the salary, again PF. I'm keeping again 12% of the basic here in this case. There will be LWF in Karnataka, it's 20 rupees yearly. PT 2400 yearly in the case of Karnataka. Now what we have learned, what CTC? CTC is gross plus whatever the company is paying to the government for the behalf of employee. That's called as CTC. What's net in hand? Net in hand is what we were supposed to pay cash minus the deduction which will be paid to the government, the second part to be paid to the government. That's net in hand. Now I was supposed to pay 8 lakh and I paid just 4,23,000. How do I adjust it? So in your Excel, you will go to data, what if analysis, goal seek. What value to set? CTC. What do you want the CTC? I want 8 lakh. How you will make sure that the CTC is met? I want the adjustment to be done here. Okay. So see, I got my net in hand, my CTC got matched, and my CTC is now properly framed. So what we have learned today? We learned the concept of gross, CTC and net in hand. Gross is the basic plus all the allowances. Then CTC is whatever you are giving the cash plus the extra contribution from the employer. That's called as CTC. Net in hand is gross minus all the deductions from the salary. And how do we frame it? There in the Excel, there is a formula, or I'll say a option. You can come to data, what if analysis, goal seek. Select what you want to set with what value and what is your adjustment factor. Simple, and your CTC will be framed. If you have liked today's video, do hit like, comment, and let me know what are the topics you want me to record. And don't forget to share the video with your friends. I'll see you in the next video. By then, take care. Bye-bye.